Hi guys, welcome to the Saving Money Show with me, your host Sean. And today we're talking some more growth stocks. We start with Netapp. We can see here with the .com, but went all the way up to 119. Since then, it's shown some growth. It's dipped down recently, and to tell the truth, it's got a good PE ratio and a good dividend, and it's made some good acquisitions recently. Today is acquired Spot, and the if you don't know who Spot is, it's it's an ADI cloud infrastructure that saves its customers up to 90% from the computer and storage infrastructure expenses. It's got a Google Partner of the Year award, and it's apparently a good acquisition. Now, if we look at financials, you can see trailing 12 months coming at 819 million. We can see that the current assets are 7.5 billion, and the liabilities are 7.2 billion, leaving them with 242 million over. The cash flow leaves them with 936 million. That's not too shabby. We go on to the next stock, which is Synaptics Go Priority. Now, we can see this doesn't have a dividend, obviously. Most of them won't. But what you can see, it's been making a loss. However, if we have a look at its assets, it's 1.4 billion. Its liabilities are 752 million. And cash flow is 191 million. Now, we go to Live Ramp. Now, we can see that again it's making a loss, but bear in mind a lot of companies are. During COVID-19, its assets are 1.3 billion, its liabilities are only 214 million, which is an amazing place to be. The reason it's made a loss is it was paying off its debt, improving its long-term debt, I should say. You can see here it had 732 million at the end of the period, and it's started paying a lot of its debt off to get it down. Interactive Core. Now, this is one that is a conglomerate of companies. Now, it is one that was working with Match.com and had a number of dating sites, and then recently it had, I forgot to say, all of these that I'm talking about all have buy signals, no hold or sell signals. And it was basically what it did was recently it's moved its it moved all its dating businesses to match. So when you look at the analysis, it will actually tell you it should be a medium target of 226, but when you can't look at it that way, you've got to look at the analysis from the last 7 days, and that brings it at $136 to $146. Now we've got Mvt Invent Electric. Now P ratio is 17, dividend of 4, and we can still catch that dividend. We can see here that 185 million income over the last 12 months, and total assets 4.6 billion, total liabilities 2 billion. Now again, this is one that would have had a bigger income if it wasn't paying down some of its long-term debt. That is 316 million cash to hand, and you can go on the website and see exactly what they do. Now we're moving on to 2 extra ones that are outside the parameters, but I still think are worth looking at as growth stocks, undervalued growth stocks. Seagate Technology. Now I'm sure at some point we've all had Seagate hard disk drives. It's a full dividend of 5.5%, a P ratio of 7. I'm sure you understand that P ratio of 5 and below is bankruptcy risk. Trailing 12 months, 1.8 billion. And again, this is one where it would have been more, but it was paying down its long-term debt. 8.8 billion in assets, and liabilities is 6.7 billion. Now the cash flow, cash to hand, is 1.1 billion. Now that's not too shabby. Now the good thing about Seagate is they're traditionally hard disk drive, and a lot of companies, they have to keep hard disk copies, but they don't just deal with hard disk anymore, they also deal with transferring from the hard disk to cloud, so they provide that service as well. And next one is Maxar Technologies. I've spoke about them in the past. Now these guys have a P ratio of 7.88. The dividend isn't worth talking about, 0.25. Now the financials, they 118 million income over the trailing 12 months, and you're going to have 5.1 billion assets against 4.4 billion liabilities, and cash to hand is going to be 56 million. Now the thing about these guys is they are deploying what they call Legion, which is a legion of satellites to improve their satellite pictures of the Earth. Now they will
expanding Maxar daily capacity to more than 5 million square kilometers. with increased revisit up to 15 times per day over the most rapidly changing areas.
Now, they make money in a number of different ways. They make money from their satellite pictures. They make money from governments around the world for taking pictures from their satellites. And they make money from providing data services from their satellites. There's also other things that they make money from. From their designs. Now, they have won 142 million NASA contract to demonstrate construction robotics in space, because NASA wants to do things in space, like fix things in space and build things in space, rather than build them here and catapult them out there, because the majority of the fuel used in a rocket is in getting out of the Earth's atmosphere. So the less weight you have to carry, the less fuel you'll need. So it's this sort of thing. Now, anything to do with Tesla or SpaceX, it's always a money maker. Maxar does the space platforms, and apparently for NASA they provide them, and NASA is the biggest customer, but SpaceX also use them. So you can understand that with the launch pads how big that is. So anyway, I think this is one that for the future is going to be worth money. It's not exactly expensive either, you know. Let's say, for instance, you went in at Neo at $3 a share, and I don't know, you bought 100 shares of Neo at $3 a share. You can afford to trim some of that and put some in here. That's if you want to. You can stay in with Neo all the way if you want, because Neo's going up. But I'm just saying. Sorry about that. Oh, I'm boring the life out of me. I don't know how you lot put up with me. But anyway, I think this will be a very good one, especially after the pullback we've had today. Now, if we can get it back to it at, $10 or $11, I will definitely load the boat. And I'll see you in the next video. Don't remember, stay safe, stay savvy, stay investing. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show.